Hello guys, on today we'll be discussing about basics of forex trading. So if you are new to my channel, please kindly click on the subscription button to join the family. All right. So first of all, I'll be diving in with what is forex. So forex trading is the buying and selling of currencies on the foreign exchange market with the goal of making profit. It is the largest financial market in the world with over $7 trillion being traded daily. All right. So basics of forex trading, that is what we'll be discussing today. Let me write it down. Basics of forex trading. So this is what we'll be discussing about today. Look at me now. Forex trading. Basics of forex trading. All right. So this is what we'll be discussing about today. And I just explained what forex is by saying forex is the buying and selling of currencies on a foreign exchange market with the goal of making profit. It is the largest financial market in the world with over $7 trillion being traded daily. And I'll be diving in more by talking about the key concepts of trading, which in here we'll be talking about the currency pairs. We should be discussing about the currency pairs. So we'll be discussing about the currency pairs. The currency pairs, for example, we'll be talking about seeing your Euro USD, GBP USD like this now. This is Euro GBP USD that I'm having here on my chart, and we're having Euro USD, Euro USD, we have GBP USD, and then some more. And we have the GBP JPY, which is also British pounds versus Japanese yen. And this Euro USD is Euro versus US dollar. EUR is Euro, USD is dollar, US dollar. And here I'm having GBP USD, which is British pounds versus USD dollar. So if we are discussing about the Euro USD and we're having that Euro USD, uh, we're having that Euro USD is having a quote of let's say Euro USD is having a quote of 1.10. 1, 2, 3. This is it. It's having a quote. It's telling you that euro is $1.10. It's worth $1.10. Euro is worth $1.10. Like now, I'm currently looking at GBP USD. You can look at here. This is their quote here being listed here. So this GBP is 1.35354. So in US GBP USD, 1 GBP is equals to 1.352. Yeah, I'm looking at here 1.352 USD. 1 GBP is 1.352 USD. This is what it's actually talking about. I'll be diving in more by discussing about what a pips and ask price is, a bid and ask price. So let's talk about more on a bid and ask price. So if you don't know what a bid and ask price is, this video will enlighten you more. All right. So this is it, a bid and ask price. So we have bid. Sorry, I misspelled this. Okay, let me use a capital letter from the beginning here. A bid. Sorry, a bid and ask price. Ask should be in capital letter and ask price. So a bid and ask price. So a bid price is at which you can sell the base currency, while an ask price is at which you can buy the base currency. Look at this now. The bid price is at which you can sell the base currency. The ask price is at which you can buy the base currency. So you buy from here, you sell from here, you buy from here. When looking at it, you can find this in your MT5, MT4. You find the ask price, you find the bid price. So in between it's between the ask price, this is called the bid price, and this is the ask price. So in between it, in between the ask price and the bid price, in between this ask price and the bid price is called a spread. It's called a spread. So in between it, it's called a spread. So a spread is a distance between the bid price and the ask price. A distance between the bid price and the ask price is what a spread is. All right. So we'll be diving more in talking about what is PIP. I'll be diving more in talking about what is PIPs. PIP, I, PIP. What is PIPs? So PIPs actually means percentage in points. There is it. Percentage in points. Percentage in points. It is the smallest price movement in a currency pair. It is the smallest price movement in a currency pair. And it's actually look at this. You can see the pips here. This is it. The fourth decimal point here is the pip. Look at it. I don't know if you can see my mouse. Look at this. This is 1.3304. So the fourth decimal point here is called a pip. While the fifth one here is called a pipette. The fourth decimal point is called a pips. While the fifth one here on top of it here, like a decimal point, is called a pipette. You see it? So a pips is the fourth decimal point. Is the fourth decimal point of a currency pair, and it's the smallest price movement. You can see as the price is moving, you see the price moving, changing. Before you know it, this will turn to 4. Once this is 9, here will turn 1. So it's the smallest price movement of a currency pairs. That is the full meaning is percentage in point. So I'll be doing more by diving into leverage. So we'll be talking about leverage. What leverage is all about. Most of us would have heard about leverage, but we don't know what it's actually talking about. So after this video, is going to enlighten you more about leverage. All right. So what is leverage? What are we actually talking about when we hear about leverage? So leverage allows you to control a large position with a small amount of money. It allows you to control a large position with a small amount of money. Okay, if you're having a leverage of this, if your account is at this, I always tell my students to use this leverage. It's always protect your account 1 to 1. If you are having a risk a leverage of 100 to 1 risk reward ratio, 100 to 1 leverage, is actually telling you that with $1,000 you can use a $100,000 account size. If you're using $100 here, it's telling you that you can use a $10,000 account size. If you're using a $10 account, it's telling you that you can actually make use of a $1,000 account size. So you are timing it by this. Some broker will be giving you 1 ratio. Some broker will be giving you 2,000 ratio 1. That's why most newbie blow the account. It's actually telling you that if you're using a $10 account, you're actually timing it by this 2,000. A $10 account, you're actually timing it by this 2,000, which is enabling you to make use of $20,000 what lot size. You see it. If you're making use of 100 account size, you're actually using a lot size of $200,000 account. So there's the work of leverage. So the higher you increase your leverage, the higher your risk. The higher you increase your leverage, the higher your risk. All right. So we'll be diving more in talking about what a lot size is. What a lot size is. Okay. What a lot is. Okay, let me take it back. What a lot is. What is lot size? So lot is always traded in units. It's always traded in units. That's why they call it a lot. And we have different kind of lot size. We have the standard lot size. We have the mini lot size, and we have the micro lot size. We have the standard lot size. We have the standard lot size. We have the mini lot size, and then we have the micro lot size. So these are the three type of lot size that we have: mini lot size, standard lot size, and micro lot size. So the mini lot size, if you are trading, making use of if you are making use of 0.01, you're actually trading on a micro lot size. All right. So if you are making use of 0.10 and above, you're actually making use of mini lot size. All right. Well, if you are making use of $1 lot size, $10 lot size, $5 lot size, $2 lot size, you're actually trading on a standard lot size. So you see some people are making use of 0.03 lot size. So they're actually trading on a standard lot size. All right. So that is how you can identify the standard lot size, the mini lot size, and the micro lot size. All right. So we'll be diving in more by talking about the types of forex analysis. So we all traders, we always analyze differently. All right. So we'll be talking about the forex analysis, which we'll be having. I'll be discussing about the technical analysis, which is we're having technical analysis. These are forex analysis that we have. Technical analysis. We have fundamental analysis, and we have the sentiment analysis. So these are the three types of analysis that we have in forex trading. So the technical analysis, where they are the analysts that make use of the charts, the patterns, the indicators. So we make use of the charts. These charts, we read the charts. So these are technicals like this. You can see the my analysis, waiting for price, waiting for price. So it's actually this is a technical analysis. So I'm trading this. I'm analyzing using the technical analysis. All right. So if you are trading the fundamental analysis, which is this, you are looking up for a economic indicators such as your interest rates, your GDP, your unemployment data, your CPI and NFP. So all these are under your fundamental news. They are your fundamental analysis. So they make use of the news announcements. So we have the sentiment analysis. They are this analysis. They are this kind of traders that they trade based on their behaviors and their positionings. So they trade based on their behaviors and their position. All right. So we'll be discussing about the market hours that we have. So most of us don't know the market hours that we have. So have the Sydney. We have the Sydney session. We have the Tokyo session. We have the London session. And we have the New York session. So we have the New York session. So these are the four type of sessions that we have in trading. The Sydney sessions, the Tokyo sessions, the London sessions, and the New York sessions. So these are the four type of sessions that we have in trading. And then talking about the tools that you are to make use of and what you need in trading. You need a forex broker account. You need a trading platform such as your MT4, your MT5, your trading view like this app I'm using is my trading view. So you make use of trading view. You can see it here, trading view. So trading view, MT5, MT4. And as a beginner, don't just deposit money. Trust me, you will not make any profit out of it. You need to practice. You need the knowledge. You need the skill. So you need to practice with a demo account first before you can deposit money. And then try to, once you have gotten a skills on a knowledge about it, then you can deposit money and then start trading. Forex is not a gambling ground that you just enter without no knowledge. You just deposit money and believe that you can flip that money. You cannot flip the money because forex is all about knowledge, skills. All right. So you need to practice. And while practicing, you need a demo account for practice. All right. So I'll be discussing about the common strategies that we have in trading, which are your scalpers, your day traders, your swing traders, and your position traders. So, which are your day traders? Let me write it out. For those of us that are new, day traders. We have the day traders. We have the scalpers. We have the swing traders. And we have the position traders. So these are the four type of traders that we have in trading. So it depending on the kind of person you are. So because trading is all about yourself. All right. So it depends on what kind of person are you? Are you a patient type of person? Then you can then go to your position swing traders, position trading, day trading. Are you a kind of person that if you any small thing you don't run, you are not a patient type of person? I prefer you should just scalp. All right. So know the kind of person you are. First of all, before you start trading, know the kind of person you are. And that will determine the kind of time frame you have to trade with. All right. First of all, who am I? First, know who you are. What type of trade? What type of person you are? Are you a patient type of person? Are you a greedy type of person? Are you an emotional type of person? First of all, know the kind of person you are. Then you find the time frame that suits you. Don't follow others. All right. Everybody is different. Find the one that suits you and then follow it up. You find yourself going consistently. All right. Don't be listening to the noise outside. All right. So these day traders, they are the traders that buy and sell within a day. So they are the traders that buy and sell within a day. While scalpers, they are short-term traders for small profits. They make use of the minutes time frame before you know they don't run. All right. So they make use of the minutes time frame, sharp, sharp, 1 minute, 5 minutes. It's that they cannot hold trade for long, so they not get patient. So they are the scalpers. Day traders, they buy and sell within a day. While swing traders, they hold trades for several days and weeks. So that's why they call them swing traders. They can hold trades for days and weeks. While the position traders, these are long-term traders that are based on fundamentals. That's why they call them the position traders. They are long-term traders that are based on fundamentals. So they have already known the kind of person they are. All these hedge funds, they are now they. All right. So this is it. I believe you have understand and learned something. Don't forget to share to your friends to also learn something from this video as well. All right. And don't forget to subscribe to join the family. All right. So take care and bye for now.